Let me also welcome on board then Sandeep Tandon and talk about what a mega success the mutual fund performance has been. Sandeep, hi, good morning. In the last 3 years,
Very good
your
morning.
equity AUMs, as I understand, have grown from 36 crore rupees all the way to 19,000 crore rupees. That's a 500 times jump. What would you say has contributed to the success?
So I think this all has been supported by the trust of lakhs of investor which we has invested. So we have more than 20 lakhs folios. So the trust of investor and distributor which they have showcased us in our processes, in our risk management system which we have built, with the investment framework which we have built, which has led to this sort of AUM growth which we have seen. So I think it's all about processes which we are able to demonstrate, and we have earned this trust from in last 3 to 5 years.
Right. Sandeep, also just quickly, if you could tell us, for a performance which is better than others, different than others, you need to follow a different approach. So could you just tell us your approach in stocks picking approach in asset allocation towards various sectors? What are the things that you look at before selecting a stock or a sector?
So, so Pankaj, the key thing which we always, let me start with the phrase we generally talk about, that we are in the business of risk management, and returns are byproduct. Okay, so the entire thesis which we have built, our risk mitigation framework, which we generally call it VLRT framework, where we try to capture our global data, global macros in the form of liquidity indicator or risk appetite over and above the valuation analytic which every traditional house has said. So when we look at the combination aspect, it gives us a better outperformance, because it's all about what framework you have built. The way we look at, we all live in a very dynamic world. Data keeps on changing. We can't have a static style of money management. So we brought India's first dynamic style of money management. Okay? So as a mutual fund or as a AMC, we are not in that sense, but we say we are a data analytics firm. So entire thesis, Pankaj, revolves around data analytics, and that gives us some edge in terms of taking or generating superior risk-adjusted returns.
Got the point. Let's start with the markets, Sandeep. What do you make of the current market situation? We saw a correction last 3 days. We've seen some buying coming in. You think markets have made a bottom in the near term?
So as I always talk about, that 2023 will be more volatile, and one has to live with these volatile cycles, because the larger perspective of Indian macro looks very strong, both from medium term and long term perspective. Yes, we have seen good amount of capitulative moves in many of the stocks. Okay, in India, particularly in the mid cap and large, in the small cap space also, but even in the large cap space, we have seen good amount of capitulation. The Quant fear index was one of the highest post-COVID levels. So that's the level of fear which has been built. Even today, market participants are very reluctant to participate. Okay? And that has led to a small rebound which is expected. But I also like to give you some word of caution, because though Indian macro, everything is good, but global risk appetite has declined. And this is one of the reasons we believe that the first half of 2023 might be challenging and volatile. When I say challenging, it's more volatile. So the sector rotation, stock rotation is the theme to play with that. Otherwise, first half can be slightly weak relative to the second half of 2023. But it is always, a lot of people believe that I can sell now, I can rebuild position again. That is theoretically is not possible. So if you really talk about the best way is that buy or dip strategy India should work. We remain very constructive, and I think if any events unfold because of global situation, it should be used as a buying opportunity rather than worried about that something is unfolding. So constructive from the near term and medium term perspective also for India.
Sandeep, hi, morning. You had also spoken about a great alpha generating theme in the form of manufacturing. Does that thesis hold true for the long haul? And if you could be a little bit more specific as to how one can actually play or bet on that theme.
So, in terms of manufacturing, is a very large thesis, because we are talking about the way some of the global macros or the global economies are getting affected. So that generates a huge opportunity in India. So because manufacturing itself is a very large theme as a concept, so we like to capitalize on the individual components. Obviously, by default, banking is the first component which becomes very important, both private sector and public sector. That's one important theme. Then if you look at the infra themes, is also should do very well. This has been a big, most neglected theme for last many years. The stocks opportunities are very limited. Yes, capital goods has moved up significantly, and most of stocks are becoming relatively expensive. So I think it's an opportunity in the auto ancillaries, another opportunity one should look at. So capital goods, the large caps names have outperformed and they are expensive, but there are many such opportunities available in a small and mid cap if one to shut down and analyze. So auto ancillary, power, if I have to look at the infra in general, I think these are the larger themes, and this list is can be very large. So one has to one spot the opportunity on individual names rather than saying one sector or one thesis which has played out.
Sandeep, one's wondering whether pharma can be that contrarian bet in the market. While sure enough, a DRL and Sun Pharma are what have done very well in the year gone by. But whether or not the gains can be more broad-based now in the pharma sector, which has been a bit of a lag in the year gone by.
So it's a interesting point which you have brought, because we have also seen now pharma sector is now trading in that neglected zone which we generally look forward. Okay, so we exited from September 2020 from pharma. We have been adding some of the pharma names. Okay, so it's not very decisive right now, because in terms of earning potential, it might take a quarter or two more. But if I have to look from a behavior perspective, as we generally look forward, stocks are trading in the neglected zone for wine, or I'll say some of the stock has reached the most hated zone also. Okay, people don't want to even touch pharma names. Rather, majority of the fund houses are actually exiting because they have been holding for these names for a while. So their patience is getting tested. So I think it's a good opportunity, but one has to be very stock specific there, because it's not that we are able to take that call. The sector has reached a bottom and then one should look for everything. I think bottom fishing should be done in some of the individual names, and particularly those names which has been in neglected or beaten down and something is, or some trigger are expected. Those are the names which we are looking at.
Right. So pharma is something which you would look at, but it's a neglected sector, so opportunities could come in, but one has to be selective. That's what you're trying to say.
Yeah.
Right. In terms of selective, would you categorize healthcare also in the same category, the likes of Fortis and other hospitals?
See, hotels, hospitality space itself is very good post-COVID. This sector is recovering, so we are constructive on the hospital space. But only thing is that we have to look at the valuation. Some of the valuations still very stretched. Even some of the diagnostic companies, they have corrected a lot from the higher levels, but they are still not that attractive. So I will selectively, one can participate in the hospital space also, but I'm more constructive on the pharmaceutical, the formulation companies or the APIs company or the CAMS company. So more focus on the pharma companies rather than the hospitality areas.
Sandeep, what's the outlook when it comes to the entire cement space? Because Ambuja is something that you had looked at a long time ago. Is there anything else, or what's the compelling argument within the cement space?
So if you really look at, if we are constructive on the infra, then cement by default become the first choice. So we are holding a very large exposure in some of the large cap companies, some of the mid cap companies also. So we are very constructive on the space. This quarter, in terms of volume growth, will be very good. May not be great in terms of margin. But if you look forward, let's say, talk about next 1 or 2 quarters, so going from the, let's say, FY24, financial year 24, I think it should be more constructive, because we expect even margin expansion, because energy prices has corrected a lot, so which will help them. Demand is anyway picking up. The only concern which we have, that extraordinary capacity announcement which has made by all the players, that they will go to increase their capacity by 30%, 50%, 80%. That is something which is slightly scary at this point in time. But one has to look at whether it really get implemented, or this is just an announcement, because to implement this side, it takes time. So from a near term and medium term perspective, we are very constructive, but too mature to talk about very long term thesis given the extraordinary capacity which is being talked about.
Right. Sandeep?
Hence, the patience of retail investor will be tested. But so far, we have not seen, and it matches with our thesis. If they have made extraordinary money in 2020, 21, they are more patient. Okay, because this is not their core business. They have left this thing to the investor like or investment manager like us. So I'm very constructive from the retail flow perspective. I have not seen any slowdown neither at our end nor at the industry level. So I think this phenomena has potential to last for long. So and it fits with our larger thesis for India as a to be $10 trillion economy in 10 years time. So I think I personally don't expect the retail flow will slow down, and so far there is no trend to endorse that.
Sandeep, always have, a pleasure having you on the show today. Thank you so much for taking the time out.
Yeah, thanks a lot.